Okay, it looks like we're live and we've got Rudy here. He was sitting by my foot and I couldn't move. So I just picked him up so he could say hello to everyone. Pretty soon I'll put him back down though, or else he's gonna want to go on the desk, and that's a little bit awkward right now. Yeah, I was gonna be on my own today because Clive is not coming on. He's got something he's doing. But then the market sniper contacted me asking if I was going to be on, and I invited him. So the title today is "What is the best way to safeguard your savings from inflation and taxation?" And by savings, I don't mean investment in the stock market and things like that. More like plain old classic savings, like putting your money in the bank, so to speak. So we're going to look at that. The thumbnail says cash ISAs, which is like a tax-free savings account in the UK, or gold. You probably know what I'm going to say, which one I'm going to choose, but I need to try to attract more people who might be putting their savings in cash ISAs. I know a lot of you are probably not, hopefully. But anyway, Rudy, you go back down now, boy. Let's get good boy. That's a good boy. Anyway, um, oh, Francis is waiting already. Okay, let's okay. I'm feeling well, Bruno. Why is that? Um, hi, Francis. How are you
How you doing,
doing?
Mario?
Good, good. Yeah, someone just asked me. I hope you're feeling well. I'm not sure why, because I'm feeling pretty good. Um, but yeah, the title today of the live stream is what is the best way to safeguard your savings from taxation and inflation? And I was noting that by that I meant not like stock market investments or other investments like property or anything like that, but more the traditional, like what people used to do 100 or 150 years ago, put money in the bank. And I saw an article, Francis, earlier this week on in the FT, and I'll bring it up so we can start talking about it. And it's this here. UK households prefer cash as they plow record sums into ISAs. So for those who don't know, I'm sure you know about this, Francis, ISAs, but there's two kinds of ISAs. There's a cash ISA where you can put 20,000 pounds every tax year, and you get like a measly interest depending on the Bank of England rate, and it's tax free, and you can do it every tax year. And there's also a stock ISA where you can put 20,000 and invest in the stock market, which I've done personally. I haven't put it into the cash ISAs, but now people are concerned that the Chancellor, Rachel Reeves, is going to cut the amount you can put into cash ISA because she wants people investing more in the economy. So instead of buying gold sovereigns, Francis, they think that cash is safe. And I'll let you chime in now, but afterwards, I've done a little bit of number crunching from 2000. I've compared what's happened to, let's say, a gold sovereign, which is this here, which is about, well, it's 7.325 grams of pure gold, or 0.2354 of a troy ounce. I've compared how that's done since 2000 and how cash is done since 2000, but I'll let you chime in.
Well, firstly, in terms of the allocations, I don't think you and I are going to argue much. I'm on the gold sovereign all day long,
Hey,
and
it looks. No,
and
that's all right. That's fine.
certainly not physical cash. I'm just wondering out aloud, going to the larger question which you're asking, which is why people are putting money in a cash ISA, which in the UK means pounds, for the Americans watching and the other countries. And it's a British system. It's called an individual savings account. That's why it's called an ISA. And it has tax benefits in it where if you're allowed a certain amount and you gain it. That's basically it. It's a wrapper. Which has a tax covering, but you have a certain maximum you can put in. My wondering on that is there might be, first of all, the UK. So many British people are quite UK centric. And the FTSE 100 versus what's been going on with the Mag 7 are two different stories. The FTSE, I actually haven't looked at it recently, and I'd imagine everything is going up a little bit because so much fiat debasement. But the FTSE is not the same. The UK 100 has not given the same returns by any means. I went over to the UK in 99 and Tony Blair was in charge and it was
Yeah, almost
6,927 pounds,
7,000, wasn't it?
almost 7,000.
Yeah, yeah.
And that was 1999. And
Yeah, so it
we
hasn't gone
are
that far.
and we are more than a quarter century. We're 26 years since that moment. Call it a quarter century. We'll give them a wee benefit. And the FTSE's sitting at 9,221. So when you consider a compounded CPI, and I don't have that for the United Kingdom on TradingView easily. If you do, I'd love to know, Mario, if there's a UK CPI, but I can tell you that is hugely down. Compound anything along the lines of 5%, which is an understatement for most people, substantially, but probably over what the government officially declares, over 26 years. And you probably need to do, at least 2.5 times to just be break even. So to be 2,000, not even 7,000 to 9,2, to be 2,300 points up on the UK 100. Some British people are aware that there are other stock markets, such as the Mag 7, and that they are more growth prone, and so they could have been in them. I remember when I was there, I looked at them. But the question you asked was, are we wondering why so many are putting in cash? My opinion is it's such uncertain times that you do have access to your ISA money. I don't know, is that annual or can you take it out at any time?
You can take it out at any time, I think, and I guess you pay a penalty for the interest.
Yeah.
Uh,
So I think actually people are afraid they need contingency funds. They just don't want it to accumulate. They want to make use of the ISA because you get the interest tax free, providing you don't need it for the year. But if they're in an absolute hole and they need it, they can get it, but
yeah,
then they'll just have both. So I think it's more concern about the near-term future for everybody. You look at some other drivers that I'll just throw in as a wild card before handing back to you, Mario. Much less children, and one of the reasons for that is a negative view of the future and uncertain finances. And I think the UK average indigenous Briton, call it a white European Brit, does not feel optimistic broadly for the trajectory of his future and the country's future, which is another indicator. So birth rates, tendency to have families, even marriage rates. I think you're going to have a lot more single males keeping an arm's length, some out of choice, some without choice. But I sense this is a bit of a misery index thing as well. And it's also an emergency fund. That would just be my.
yeah. I would say, yeah, I agree with you on those points, but also financial advisors in the UK they have no clue about gold or sovereigns or Britannias because they're not financial assets. If I- they don't realize that the sovereign is still like legal tender.
I was going to say it must be
Yeah,
recognized legal tender.
yeah, is legal tender, and the face value is a pound, which is silly because the spot price is 644. That's where it closed all-time high on Friday. I think you need to pay about 677, 678 with a premium. And I remember Francis and the viewers, I first bought sovereigns. They were 52 pounds each, and I still have the roll. And I bought 50 of them, so it was 2,600 pounds. And I guess thinking now, why did, I'm not thinking, oh, I should have bought thousands of those back then or a lot more. But you never know where the price is going to go, even though you have, even back then it was 0203, Francis. I had the inkling that things were going to get worse. They're going to keep printing, mainly because I listened to Ben Bernanke make that speech in November 2002. So that was the lowest I got, 52, but I actually bought some at 50 for my mother-in-law, so she got a lower price than I did. And I went through some numbers because some people are going to say, well, in the eyes, if you put it in ISA, you get the interest, so it actually will outperform gold. But yeah, I crunched the numbers. So back into, and I took the price from the LBMA, let's say around the 19th of September, because that was Friday. And so 19th of September 2000, the price of gold was 193 pounds. So on Friday, it closed at 2,737, which is amazing.
Yeah.
So you could have bought 219.7. Of course, you can't buy zero point 0.7 of a sovereign, but basically you could have bought 220 sovereigns. And this Friday, you're only able to buy 15.6 sovereign, which is amazing. I mean, it just goes to show how our currency is just going down the drain. And I did this exercise every 5 years up until yesterday, Friday. And I added up all the sovereigns and their initial cost. And I worked out that now all those sovereigns that I would have bought worth 331,383. So that was like a huge, huge profit, because you put in, you didn't put in as much, of course. But if you did that with cash, if you put 10,000 every year instead of buying the sovereigns, and I used the average rate of 2.5, you come up with, I've got the number here, 83,500, and that's compounding all the interest. So gold outperformed cash, tax-free cash with interest 4 times. And the problem with the ISA is that I've got here from in the early 2000s, you'd get a 4 to 6% rate. But from 2009 to 2021, and I think that's the period that's really hurt savers, and that's why not just the UK, but every country in the West is in so much trouble. The rate was 0.3 to 1%. It's only now since 2023 where rates are back up to like 3 to 5%. So it's a no-brainer. Am I saying that the sovereign is going to be, but it could go to 2,000 pounds in a few years, and I think it probably will. The problem with people, Francis, is that they're scared of the unknown, and many people don't understand gold and how it's money. Let's say 6, 7 years ago at my golf club, these older gentlemen came to me and then we're talking and said, "Oh, I've got this bond that is coming due. What should I do with it?" And I said, "Well, buy some gold." And the guy said, "Oh, no, it's too risky. I'm not going to buy gold." And at the time, gold was what, 1,000 pounds. So,
Unbelievable.
you can talk to people, but they're set in their ways. There's a super chat here, Francis, from Nashville, Pasta Man. And I'm not sure because I don't understand it. Maybe you understand it. Curious about pricing 100 grams GLD. Is that, you mean gold? I
He means the
guess.
ETF.
Oh,
Gold. GLD is the
yeah,
ETF.
but how? Oh, 100 grand. Is that 100,000 GLD versus 3+ ounce pricing? I'm not sure. Could you be a little more specific, Nashville Passman? I don't understand your question. Oh, and someone asked as well, Francis, I saw the question earlier that the miners did very well, of course, on Friday. Barrick was up 10%. You know, we've had the story that Morgan Stanley is going to have a 60-20-20 allocation, 20% gold. And he said, "Oh, I'm thinking of selling 30%, taking profit on Monday." And I have to say, I have thought of that because my my ISAs have done really well. My mining position, my ISA account, but I think it's too early. I think it's just starting.
Can I say something on that?
Yeah,
So you brought up 2 points. You brought up miners and you brought up the 60-40 suddenly becoming 60-20-20. So I'd like to just give you, I suppose, a bit of feedback. If you'll allow me a share, UK-based people,
yeah.
follow Mario.
You need to share
I've got
something.
something for you. And in
Okay.
fact, US and rest of the world, you're not excluded from this. You can also benefit.
Yeah.
As gold goes up, which it will, so will the miners, as Mario brought up the topic. And one of my favorites that I used to trade in and out of a lot was Fresnillo, the silver miner.
Yeah.
Now, it's a UK listed LSE stock. And I saw this falling wedge. We'd drawn it. This is a quarterly chart with a falling wedge. You'll see that's our draw. Maybe I'll fatten that line up just to make it pop a little bit more for you. That's a falling wedge. You could also technically get away with making this a flag. In fact, it doesn't really matter. The projection of target that I will give you. If you have a UK ISA, non-advisory on either Mario or myself, I will be placing similar trades. I was late to this one because I was concerned about the great taking. So I've had small amount of miners. I've not been overexposed. I'm now giving into the FOMO to a
Mhm.
degree, I have to say, and I'll take some of the risk and I'm going to try find out how to get the share certificates. I do still fear the great taking immensely, but it has kept a lot of us out of miners. And so I've had much smaller allocation because I've got this higher associated risk. It's paper unless you have a certificate in your name. That said, if you're prepared to trade it as a derivative, as a position, that just means put it on and leave it for years. Now, there will be carry costs if you do that on a CFD, or you buy the shares on a brokerage account, which I'll consider doing. I'll tell you my shocking number for Fresnillo, because as Mario correctly says, gold's going to go higher. And when we finally flip that gold silver ratio, which can be about to happen, if they cause a crash, it could get another jag up, which is something I've warned about, but maybe won't happen. But long run, it goes whole bunch lower on the gold silver ratio. Every time you have a super surge, you will. So for me, the key levels is around 73 for that to flip, and we're in the 80s at the moment. Silver is going to do an even more schizophrenic version of gold when that happens. And that's once we've dealt with the 50. We might go up to close to 50, have a small little dip back. I don't think it'll be much if we do, but there might be still a technical resistance. There might be a lot of call strikes or options or derivatives at 50. I could see that being a possibility. But whatever you dip back after that, once we break 50 the next time, that is all risks off, I think, next stop 3 digits. And then potentially, in an exceptional set of circumstances, this is more a statement on the dollar than silver, possibly 4 digits. And that could see single digit, 9.99 is single digits on the gold silver ratio. So that would be a super overperformance. I have Fresnillo, one of the big name, very big production, quality, long-standing, known entity management, doing a 10,000, and this is pounds, 230 pound target. Now, for those of you who think that's a lot, it's already at 2,200 and it was a buy for us at 650. Now, I might be incorrect. This might be pence.
Yeah, so it's
Pence.
20
My
pounds,
apologies. Let me
20
let me re
pounds, yeah.
pence. Sorry, as soon as I said that, I said that sounds wrong. Sorry, let me restate. £6.50 when it was breaking. Currently £22.76. £102.30. So hopefully I've clarified that confusion I wrought there a little bit. But that still represents a 5x from here. Don't expect it overnight, but let me tell you, it wasn't forever that it went from that low there to its last high. You're talking about 3 years, about two and a half, maybe
Yeah.
going between 2.5 and 3 years. It's not forever, and that journey already started here. And the contagion and the collapse, 27 sounds a long way off 28. It isn't. And that doesn't mean it's over for it. It just means it might be a slowing and a bit of churn for a while. These three candles on a quarterly basis, we're on a 3 months. Please understand, this is a quarterly, are absolutely vast.
Yeah, they look very good.
These are extremely healthy. And that was the look one way, go the other way. I'll highlight here the usual skittishness of silver. It sold halfway down this candle the following quarter, absolutely rejected to where it opened, and then smashed up. That's an intra-quarter major reversal. So it
Mm.
tried and nobody was having it. This is gushing cash now in its production. It's a cash machine, prints it faster than J. Powell can type up digits in his computer at the moment. And the silver party is really only just getting started. So
Yeah.
£102, you heard it first here. It's available on the LSE. I think US guys can get whatever they called SDRs or maybe even purchase offshore with their interactive brokers. Non-advisable, but I may well be taking it's late positions. I should have paid £6.50. But I was making a lot of money on the gold and the silver. I was letting the miners come. I was worried about the grade taking, whatever excuses you want to throw out. I still see it doing another at minimum 5x from here. But this is a quarterly chart, so don't watch it on a tick
Yeah.
and lock them up, try get certificates and throw them away, is my counsel to myself, not advice to anybody here. So that's the minor story, and that's a little value. I would like to still go to the 60/40 if there's still time, or tell me if you want to interject a bit first before
Uh,
we do that.
no, no. I think a Pastaman was asking about what 100 grams is in ounces, and the easiest way to look at it is, first of all, the ounces we talk about is troy ounces in precious metals, which is different than the imperial ounce. So one troy ounce is always 31.1035 grams. So that's the only thing you need to know. It's not because the imperial ounce is 28 grams, so it's very important that you distinct and make the distinction. So I'll let you move on to your to 60/40. That's become 60/20/20 for Morgan Stanley.
So here's my take on
Do you
this.
want to stop the
I
sharing?
can't.
Yeah,
They've done something annoying. Where do they put
I'll
the
do it.
clock?
I'll do it.
Oh, there it is. I have to open
I've
another
done
menu.
it.
There
Yeah.
you go. Good man. Thank you for helping me. So um, I'm releasing a video that'll go out tomorrow, but I'll give you a small snippet of what I've said in there. It's one of my motorbike around. I'm doing some dirt bike riding and yelling into my helmet. The guys like that format. It's a bit of a vlog. But my take is the following. Round about the 80s, post Forker, the 60/40 portfolio was, to me, coming out of the late 70s, is a financial psyop that was part of the petrodollar scam.
Hmm.
So let me clarify that statement. They naturalized this as a conventional wisdom at the time that Kissinger was sewing up the Saudis into, hey, nice oil fields, be a shame if someone attacked you. Of course, we could always protect you if priced it in dollars, bought treasuries. And then we'd make sure no nasty people come steal your oil fields, set those places alight, cut some heads, export some democracy. So the Saudis played along.
Yeah.
And part of that was also getting Wall Street to package assets and investments as sold and financially advised to Main Street investors on how you should be investing in stocks, and that 40% of your net investable should not actually go into stocks, should go into this amazing creation, a debt instrument that Volcker just finished pushing into super high rates, and we're at a low that allowed for the 40-year bull market that ended in 2020 that we called. So that was a psyop, and I'll tell you a reason why it was a psyop. If you speak to the legacy Italian families, Mario will prick his ears up a little bit about this one. Some big names. They were always a third, a third, a third, and one of those thirds was gold. The other third was property, and then the final third was equity. That was positions in businesses. Sometimes they would even have private businesses, but certainly listed businesses is the accepted lower risk of
Yeah.
nowadays.
And and the property as well had vineyards.
Correct. They were agriculturally productive. They were
Yeah. Yeah.
the olives, vineyards, all sorts of things. They were generating income. Now, that got terminated, the need for gold. There was an active financial psyop to diminish gold. Greenspan was a gold advocate until he became a Fed chair. Then he went out and yes, Mario's showing the article. We're singing the same tune, but I'm just bringing a different take and a different detail on how that came to be. They tapered the conventional wisdom for the masses. Not that they took it, the legacy families and all of them. The masses for mainstream financial was the 60-40. So now they're doing a walk back because it's quite clear. The problem they have is people like us, Mario, Clive is not here today, and other honest brokers, I'd like to say, who've been warning that we are going into mega debt and fiat debasement, have been suggesting that people be overweight gold. They are realizing now that gold pumping is a singing canary, and they being the banking cartel, Morgan Stanley chief investment officer, tries to get his bus out in front of the story now that people like Mario and I have been saying gold, gold, gold. Almost in my YouTube channel, I read the Bullion Vault document out aloud on my YouTube channel saying this moment is coming in 2009. That's how long I've been in the gold space on YouTube. Mario's been an equal time. But the point of the matter is it ends in a major stagflationary fiat debasement debt, and we've called this technically, and this is now happening. So in a bid to get in front of it, they've run up the gold percentage from 0 to 20 and halved the bonds. And I'm like, these guys are still trying to walk their way to final truth. You don't need the bonds at all. In fact, you
No.
should be looking for short trading. And
Yeah.
in that YouTube that will go out edit tomorrow, guys, please follow and give us a like if you care to. You can watch me explain what my 50, 30, 20 portfolio is, and there's a 0 for bonds. And you can find out all about it on the Market Sniper when I go through it. And I give my breakdown that were I your hedge fund manager on a 20 and 2, I would make big shekels for both you and myself by doing the following. And that portfolio is it. And it has 0 in bonds, and it has a very meaty 50%, of which 20% are miners and 30% are the 3 metals of my favorite choice, with the preeminence on gold. And I give the ratios as well. So watch out for that one tomorrow.
Yeah.
But yeah, I took a lot of time there. So let me
Oh,
hand
no
back.
problem. So you're talking about the bonds, and I've been looking at this chart for a while. It's gold versus the 10-year Treasury note, constant maturity. And yeah, I've been following it before it even broke out. And this is a really good it looks a lot like the the normal gold price, but it's in 10 years. And you look at this, you wonder why they want to keep still 20% in treasuries, like you said, or bonds. I think, Francis, it's because
They
the
need it.
they're going to be forced to by governments and regulators, because if they don't, the whole system implodes. And I want to share another thing here, because I don't know why I never did this before, but I did the gold price in gold sovereigns, which is really fun. And I put all the details here of the gold sovereign. So as you can see, we closed at 644.43, which, when I bought my first one at 52, I would never have thought that we would be here. So that's how it goes. But so legal tender face value of a pound, which is silly, but it is. And the fact that it's legal tender is the reason why there's no capital gains on the sovereign. There's no capital gains on any coin of the realm, also the Britannias. So the pure gold content is 7.325 grams or 0.2354 troys of an ounce. So for my viewers in the UK or anywhere else, if they want to know what the price of the sovereign is, you take the normal gold price and multiply it by that number. So for me, that number is really important, and also the 31.1035 Francis. That's how many grams there are in an ounce. So let's see if there are any questions. I got some other charts here, but we'll look at them later. Any questions?
I'll just show the guys some eye
Yeah,
porn while you come up with the cues there, Mario.
yeah.
1,000 grams of the good stuff. 4 nines, silver,
Oh, okay.
an eventual outperformer in a bar, wrapped in a nice little condom, as I like to say, with a box and its certificate matching
Yeah.
card that I've been using as my demo. I also particularly like this 5 ounce biggie, which has got
Oh.
the dragon on it.
Hmm.
It's in its plastic case. I'll maybe just give
Someone
you.
asked earlier, actually, Francis. I'm not too familiar with gold IRAs. They're like a U.S. product. It's to do with retirement accounts. I guess you can transfer some of your money in your retirement account to gold IRAs, and I think people like Miles Franklin and the Sheckman, they provide that service, and they actually store the physical gold in the RIA, I think. Do you know a bit about that?
I'm out of my depth on the US
Yeah,
tax. I don't want to
I'm
overcommit.
as well either. I mean, but if you want to find out more, I'm affiliated with Miles Franklin. I have a link to my landing page in the description. You can call their brokers and ask them.
Isn't that beautiful?
Is
It's
that
got the old
silver?
Nag's head on there,
Yeah.
Mario.
I've got a 10-ounce silver coin I bought a few weeks ago, which is quite nice.
Prefer the dragon. I think it's easier to get on with.
Let me have a look. Hold on. Yeah, look. This one's got the dragon too. Look,
Yeah, I think we got something pretty
he's
similar.
slaying the dragon.
Not the same year, but very
Yeah,
similar.
and
That's
it's
a very
got
beautiful. How many ounces is that? That looks really big
the
unless you've
10
got it
ounce,
very close. 10.
10, yeah.
Yeah, mine is fiber.
Yeah.
Dragon 24.
We
Work
got
on that one at the pertinent.
a question from Chris Conman. Thank you, Chris, for your super chat. Looking at the fundamentals of the current stock market, what do you think are the chances of a 5 to 10% sell-off by end of October? If it occurs, will everything sell off, including the miners and precious metals? I'll let you answer first, Francis.
Uh, I got part of that question. Which stock market? When people say stock market, do they mean the Nasdaq, the
I
S&P,
think he
the
means a
UK FTSE?
general stock market, I guess. Nasdaq, S&P.
So there was some interesting charting that I was looking at. So first of all, remember we're non-advisory and we don't know the future, neither of us. And we can just say this is an opinion we have. I took an interesting screenshot of how markets fall. The Buffett indicator, as many of you might have followed, this is not my work actually, and I didn't get the person's name. Let me just say, Great Mantis, actually, follow him on Twitter. He often throws some interesting stuff. I thought that's interesting. I must give him some credit and a shout out for his post. So this is kind of on stock markets. It just so happens I was looking at this and you've asked a stock market related problem. Remember that this is the Dow Jones index. It's specifically American. It's not overly tech. It's not NASDAQ. It's the general Dow, which is 30 stocks, which does change subject to it. But one thing a lot of people were trying to put on me is a sort of critiquing people that were overly bullish the stock market. And I said it's not a melt up, and other people have said you're wrong. It turned out a melt up. And my key point has been when we were making those comments in February, We were in Cape Town with Gold Republic, actually. The Dutch guys, also great European providers of gold, da 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 da. And they had us out there. I said, no, it feels like there's going to be something coming soon for the stock market to the downside, and that gold is your key trade. By April, we'd had Trump's tariff tantrum and we had a 27% crash. That is this here. But interestingly, when they did a check-in recently, so that's 2025, I'll come back to the 2008 and 2000 chart in a bit. Interestingly, when we had a check-in, everybody was congratulating Henrik on saying, no, it'll first go higher. Now it has gone nominally higher. You're about 7% higher after taking a 27% beating to the downside. But the dollar is 15% lower across most European currencies, and they're bad as well. So in actual fact, the recovery is incomplete. You're about here if you divide it by the Swiss franc. So all that's happened is you've had massive volatility to the downside, and in any other currency that hasn't completely collapsed, like the dollar, you're not even back to where you were before. So it's worth mentioning when you talk stock market, are you just talking, most people mean the nominal price, but you're a monkey on a greased pole if you're talking the dollar, and in fact on all fiats to varying degrees, but especially the dollar recently. Let's get back to the question now, having just made that point, which I think is important for everyone to understand. Gold ounces, this crash, you haven't even come close to recovering. You're in a head and shoulders getting ready for another down leg, which is gold dominant. So the trade was gold, not equities. And I continue to assert that the guidance I gave at the time was correct. Let's look at this. What Great Mantis's post is showing, and I quite liked it, it's kind of interesting, is you're at the record highs on the Buffett indicator. It's at 220. It's never been that high. The Nasdaq, the dot-com wasn't even that high for those of you following. So the question becomes, why is it that high? How's it hyperextended that much without a major correction? And the answer lies in the following. You're in a debt and fiat-based collapse. The debt market fell 55%. Remember, 60-40, they took it away from being a three-way thing and made it a two-way thing that didn't include gold, bonds or stocks. So when a bond market crashes, the programming over the last 40, 50 years is you do the other thing, the stocks. So everybody who's it's been hearing that the bond market is terrible performing and not paying sufficient yield for the current inflation rate and is in financial repression a la the 70s, only a hyper version, which is why we say it's not even stagflation like the 70s, it's hyper stagflation. Everyone's crowded out and into the other part of the room. However, some people like Mario, like Clive Thompson, like other good brokers have said, hey guys, remember this third thing. And actually, the market has been running like the best performing market, quite clearly, over the last year is in fact gold, and the miners even more so. Let's just leave it. But in terms of asset categories,
Yeah, I've
so
got the Dow, sorry, just I got the Dow gold ratio here. And like what you said, we have a debt collapse, you know,
fiat, it's a
yeah,
debt fiat collapse. You
yeah,
see,
that fiat
people have to
collapse.
understand that it's
Yeah,
both.
yeah. But and people are saying, oh, the stock market is all-time highs, the FTSE's above 9,000. But I've got the Dow Gold ratio here, and since the beginning of the year, 2025, it's down from where was it in the beginning? It was around 17, and now we're at 1250, and it's keeling over. So
And that's a huge percent, by the way.
yeah, yeah, and all it means is that people, yeah, if you price anything in confetti, it's going to look a lot better than if you price it
Yeah.
to gold. And the FTSE is even worse. I can do the FTSE as well, and you'll see how bad that is. Let's see, FTSE index divided by Dow XAUUSD. Look at how horribly the FTSE is done.
Abysmal.
It's a bit, and people are saying, oh, they think they're doing well. Oh, I've got
No,
my,
you're not.
and they're
Fiat
not.
debasement.
Yeah.
So the point is that both of us are saying, and we need to get back to the question that the individual asked.
Oh
The point
yeah,
that
I've got
both
a
of us are,
chart here of the GDX. Francis, sorry to interrupt you.
go ahead. We'll get there
I
eventually.
guess in the beginning of April, yeah, we had a dip here from April 3rd to April 8th for so about a week. And then it just picked up and it's been going up. So yeah, there might be, if there is a correction in the general stock market, maybe the miners might dip a little bit. But if anything, it would be, in my opinion, an opportunity to buy even more. So I'll let you continue.
Yeah. So going back to the original question that was asking around the stock market is what's the odds? First of all, we're not scientific enough, and we no way to be scientific about the future anyway on an unknown. But the point of the chart that I was starting to show, am I still sharing? Let me just share that chart again if I'm not.
Yeah.
Was the three different tops that were substantial, 2008 and 2000. And the point Mario and I took a little sidebar on there and both explained is that actually in gold ounces, shares are a bad investment. I made my own reasons and justifications for why I felt I was right in February. It's down and it's still down and it fell 27%, which is very violent and has huge downside beta possibility and limited upside beta given it's hypervalued. So that's all the extensive asymmetry risk to the downside and very moderate to the upside. And gold ounces are clearly beating it. Again, gold's investment. So going back to the question, what was shown in these charts is in 2008, you often get this broadening structure. You get a shock, a tremor, and then it gets shaken off and complacency returns and you make a marginally new high. And then everybody's, yeah, every dip is a buy, everybody's dip. This is typical of how they often ends. Only the next time you get hit, it's even more volatile. And when we talk about what's actually happened is you have a bubble of a bond market that has begun revaluing downside. It hasn't even really done that much, but it's had 55% down. But it needs another 55 on what's left, another 55 on what's left, and another 55 on what's left. But you're having a bit of a slight decrease of the bubble in the bond market. That's led to a supreme overvaluation, relocation bubble into the US equity markets. And what ends up happening is all things that are hypervalued, that are unsustainable, will no longer survive. Don't forget, Amazon still 50%, just over 50% is still consumer. It's Amazon.com, what you buy. The rest with the governments and the military industrial complex and the server farms, okay. But its earnings goes down when you stop buying Amazon stuff and taking deliveries. And a wrecked consumer quickly leads to that. An unemployed consumer quickly leads to that. An overvalued housing market that's crashing, that someone can't make a mortgage payment, quickly leads to that. So what he's highlighting is 2008, you got this chop of volatility, and then you went into the massive down leg that was 2008, that he didn't even show the bottom, which came right much later in 2009. So let's go back to 2000. He's showing you again on 2000, which is why it's an interesting post, and it's not mine. Great Mattis, great underscore Martis, I believe it is. So you can give him I just thought what he did was technically interesting, and it was worth giving him a shout out. You got the exact same in 2000. 99 July, hey, we had quite a strong collapse down to 10K. Support, run the previous high at 11.2, run all the way up to almost the next 1,000, almost 12,000, 11.8. Then came a bigger smash, and this is the beginning of volatility. You start to get this marginally higher, bigger lows, supreme volatility, and then you just get the crash and it keeps going. So
Yeah.
it had a rally all the way back. Oh, okay, bit choppy out there, but we're still close to all-time highs. And you're going to hear that, and then it's done. So I think you'll get a nominal correction as well as a gold ounce correction, even though it's down on gold ounces since the correction that came in April that we warned about in February. So I don't know if you understood that. I can say it again slowly, but I think you're still going to get in nominal terms a correction because 220, that means
Yeah.
200, the market cap of the stock market is 220% that of the GDP of the country.
Yeah. I
So it's
think the
deeply
pre
skewed.
the previous high was 195%, wasn't it? That's what
Yes, and
about
that's 99, I think,
yeah,
which is
yeah, yeah.
extreme.
Yeah. All right. I'll
Stop it there. Yeah.
yeah, I'll stop
Well, here
there.
we go. There's a menu. I found it
Yeah,
now.
I've got, oh, it's all right. I've done it. I've noticed some people are saying it should be 70% physical gold, 30%, I guess, miners. But these banks, they don't buy real physical gold. I think what they'll be buying is GLD. And GLD, they do have physical, but for the small retail investors, they can't take delivery. But for the big boys, they will be able to do it. But I think that will mean that they will have to increase the holdings of physical gold in the GLD. But I think it's significant though because the whole investment world is going to look at that, and I wouldn't be surprised if people like Goldman Sachs and J.P. Morgan don't re-rate their allocations soon. Someone's asking about royalty mining companies. Well, I think the biggest one is Franco-Nevada. I think they're good. There's another one. I met the CEO a few years ago at a mining conference, and it's called EMX Gold. That's his business card. It's 100,000 of the 100,000 bolivars, the Venezuelan currency. He stamped his name there. So EMX and Franco Nevada, I would say. Have you seen the Oval Office lately? Gold, gold, gold. Oh yeah, I've seen a picture comparing the Oval Office under Biden and now under Trump. Trump does like the gold, I guess.
I'd like to raise these bolivar to a couple of Zimbabwean dollars. I
Oh,
hope you all knew that I was a multi-millionaire. That
oh
right there is 50 million. I'm very far from my camera. I've got a studio camera,
oh
but you'll
yeah,
be able to make out that's 50 and then three zeros and three zeros.
yeah.
That is a 50 million. There is, of course, a 250 million, just to show you that I'm deep in the money. And you should all pay your due respects. That's 250 million. Let's see if I can get that to pop over there. By the way, these actually had expiry dates on or before 30th first of December 2008.
Well, that
After which it is
worthless. What? Yeah, yeah, toilet paper. Uh, oh, someone's asking a question that we haven't seen. Uh, I'll ask it again to see if you can catch it. I'm torn between selling off on all ETFs to rotate into physical gold. Can you advise? I strongly believe we are due a reset. My advice is always, well, my opinion, because we don't give financial advice, my opinion is the ETFs are not real physical gold and silver. When push comes to shove, even PSLV, we've seen that the bullion banks and the big players, they've tried to keep that from that ETF from buying physical silver by shorting the shares so that the trust doesn't have to buy physical. So to me, it's a no-brainer to get out of ETFs and buy physical. I guess it's the same for you, Francis.
physical, physical,
Yeah, yeah,
physical.
yeah. Thomas Moran, do you guys know how much know much about 86 million people who have had their bank accounts restricted in I
It's a
think
big
it's
story that
Vietnam. I think
that
it's
should be covered
Vietnam.
and spoken about. It's a big story.
Isn't it Vietnam though? Not
Yes,
Venezuela.
Vietnam,
Yeah,
Vietnam.
it's Vietnam. Yeah, I've seen that, but I haven't really looked
He
into it.
thought that country with a V. I know
Yeah, I
that
guess
one.
Vanuatu. You know, that's another country with the V. But maybe some people are saying that it's a test run and they're using Vietnam. It's possible. That's why it is worrying because I thought the other day, because I've got big profits in the miners. And I thought maybe I should sell them and buy physical gold and silver. But I thought I'm going to take the risk because I think things are going to get really bubbly in the miners, and I think it's my
But do you have certificates, Mario?
no, because I have an account with IG.com, and my wife has an account with Interactive Brokers. The the problem is with the certificates. Yeah, you might, if you ask for the certificates and you get it, and then you want to sell the shares, you have,
No, you're not going to sell.
no,
Once you
but
have certificates, sit 5, 10 years.
yeah,
This goes into the 30s, this whole process. Even
yeah,
if they come out with the biometrics and they do
yeah. I
tomorrow
will.
more,
I am gonna call IG and ask them if they can send me the
good
certificate.
luck.
But yeah, I know they don't even their help desk is difficult to get a hold of. But one thing about getting the certificates, and I know you have to hold, is that if you were needing to sell it, you have to post it and they have to get it before you can sell it. That's the only problem.
This should be a hold. Once you have certificates and you have real claim,
Hmm.
named real claim, that should be a hold. It should be 5, 10 year hold.
Yeah, yeah,
There's no reason. I mean, in terms of topping out, we could start talking in 28, but I think it ends in 31, 32, and the
yeah,
aftermath 33. And I think, by the way, something we must also give a shout out to what's the English gent who sometimes appears with Franklin Mint, Alistair McLeod, I think it is.
yeah. I had him on. I
Yeah,
posted.
he's a solid guy, solid,
Yeah,
humble guy.
yeah.
I like him. He made an interesting point, which I kind of concur with. The current gold-backed fiat is fast becoming the yuan.
Oh yeah,
All
yeah,
go,
yeah,
no, there's no yuans. China's wrecked. All they want. The
yeah, yeah.
nation that stacks the gold and is quietly moving to eventually making an announcement is quietly becoming the gold-backed currency.
Yeah,
Absolutely right, by the way.
him and others have done research, and they think China has more like 30,000 tons, not 2,200.
Well, there's nothing they would never tell you.
Yeah,
They
yeah,
must be, I think, between 30 and 100. It wouldn't shock me they have 50 or 60.
yeah,
As a South African who's in South Africa, who knows about subsistent miners and wide boys crossing borders and buying gold nuggets from subsistence miners scratching in the ground, all that is going up to Dubai refined and through borders to Hong Kong and
yeah,
Beijing. All of it, all of it. And Dubai, the Arabs are there's a mint there. They're melting down. They're doing a meltdown for them, and they want 4 nines. And it's all going east, all going
yeah,
east to China, not even to India. It's all going east. You can't put a number to that. You
yeah.
can't even put a number to that.
Someone's saying here that Fresnillo is the best performing company on the FTSE 100 this year.
Should be. It wouldn't shock
Yeah,
me.
yeah, 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 yeah. I was gonna say something, but I forgot. So let's see if there's any questions.
There was
Yeah.
something we hadn't finished on as
Oh,
well.
about
What was the last
Vietnam.
question?
Was it
Yeah.
Vietnam?
So that discussion was quite interesting, Bring, because I do think it's kind of remember India where they took all the big notes out of
Mm,
circulation.
yeah.
They
Overnight, no
yeah.
warning.
It's a little bit, I feel that's a little bit like one of those stories. So, what they're essentially saying is you don't have your money in a bank anymore unless you comply with a biometric plan. They will use blackmail. You either lost all your wealth and you forego the claim. That's how they bail out their bank, by the way. It just means you bailed out the bank. Or you absolutely 100% comply to digital ID. And I want to highlight my Twitter feed, Mario, even though I'm not even in the UK, is stuffed with UK and the digital ID and Keir Starmer at the Labour Party election
Mm,
going to make this big announcement. We'll stop the immigrants because of biometrics. That this was the whole setup the whole time. Everybody's seen this. It's a badly obvious ploy. Ship them in, send your own boats to help bring them in, land them, put them in hotels, and build them up. Create a problem, culture of clashes, clash of cultures, and then say, if we'd had biometric IDs, this wouldn't have happened. Hey, we all need to get it. You
that's
all have to
rubbish.
do it. We're in this
Uh,
together.
It's called a passport and a visa. That's how you stop them.
Yeah, it's
No,
called border control. It's called
yeah, I
border
know.
patrol
Yeah,
that
yeah.
actually sends them back, doesn't load them up and bring them
Yeah.
home.
Yeah.
It's a massive difference. But maybe that's just me being a racist.
Yeah.
Um, but
Grant W. Sniper, should we buy Heckler? I think I don't have Heckler, but I think it's a good stock.
it's
Uh,
on our list.
yeah, yeah,
We've got a silver, a platinum, and gold equities
yeah,
hit list, and it's one of those. So again, I'm not telling you to do anything, but it's on our
yeah,
list, and
yeah.
we have
And
targets, stop losses, everything for it.
I'll tell you some of the others I have, and I'm not giving you advice here. I've got Vizsla and Pan American Silver. I think those are good. I think though, Francis and the viewers, eventually, it won't matter. I'm not saying you shouldn't do your research about the companies, but they'll get to a point where anything with gold, silver, or mining, people are just going to be piling into, and it doesn't matter how good the company is.
The
It's
safety check to avoid scams, though, Mario, is to purchase existing producing mines.
yeah,
That you get into exploration, you have to have
yeah,
really sure, you have to do a whole bunch extra homework
of
about
course,
people and what they have and
yeah,
reports and it's a different level. It's not the average desktoppers.
mm,
So best to stay in producers, even small producers. But like Mario says, they'll all run, but there's always a peak and a point where there's a scam, and there'll be a couple of scam
oh
companies
yeah,
that are going to jump in it because they hear everybody wanting to buy picks and shovels and being part of the gold mining run. They'll be there to scam you. Please
yeah.
understand.
Yeah, there are scams in every industry, unfortunately. That's human nature. But oh, one of the things I wanted to show, and this might interest more my European, i.e., continental viewers, and I have some, is I was looking at the charts of gold in the old currencies. Like this is gold in Deutschmarks, and it's 6,100. And which to me, Deutschmark's supposed to be a solid currency, but 6,000 marks, and then you've got the Italian liras. It used to, before the euro was created, it used to be 500,000. Now it's 6 million.
How are they getting an Italian lira and a Deutschmark current valuation, given that it's all conglomerated in the euro now?
Well, you have they adjust for the old when they convert it. There's the rate they converted at, and
Okay,
they
but that's a
use that.
locked rate. You're applying that rate all the way through.
Yeah, yeah, yeah. And to today. But what I'm trying to say here, I think the euro is a little bit of like a distraction because the euro price of gold is like just over 3,000. Can you imagine if they still had their legacy currencies at the moment? People would be saying what's going on, with gold. But 3,000 sounds a bit more plausible.
I fancy that gold Greek drachma exchange quite a bit, Mario.
Yeah, I mean, I haven't looked at that one, but so I just thought that was interesting. Dutch gulden was relatively strong as well, the Dutch guilder. Yeah, I think it's just a bit more than the Deutsche Mark. It's 6,300. I did look at that one too.
And can I make a point on a lot of your charts that you're showing, Mario? Uh,
Yeah,
please feel free to bring one of them back up again, any of
yeah,
them. They're in rising wedges.
yeah,
And traditional technical analysts will come and tell you 70% of rising wedges break down.
yeah,
Oh, okay. I'm here to tell you wrong. Okay. When you get a big time frame rising wedge in a market such as this, it's absolutely going to be an upside break. And one of the things you can do that will make it more palatable for people who have this notion that there's a fixed number of rising wedges and 7 out of 10 are going to drop is you divide by the CPI AUCSL, which is the American All Urban if you're doing the dollar. If you can find an inflation number for Europe, you divide by that. And what those rising wedges will all do that are looking like that, they're all going to come down
oh
and be
yeah,
triangles like that. And you will see that you are just in a breakout. So I am regularly doing this adjustment, and I can again show a chart which illustrates that. And I'll do it for America because the
yeah,
data
Let
is
me just,
best.
I've got the Aussie dollar here for people if they want to. So we're almost at 6,000. Anyway, I'll stop sharing and let you bring your. So it's,
It's the that's gold if we just share it. That's how it looks. Let me
yeah,
go out on the same kind of time frames that you were doing. And there's this tendency, I'll just take all my drawers off because it's looking a bit messy.
yeah.
There's a tendency for everyone to say, that's got to break down. It's a rising wedge. Yeah, you don't know your technical analysis. And I'm like, no, 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 no. No. This is, we have three types of rising wedges, and we categorize that in our theory that you'll learn, and we tell you how to differentiate between the two. And the type three is the melt up out the top rising wedge. You get the type two that's a pop out and then a breakdown, and then you get the one that just breaks down. And you've got to know the difference when which applies. And if I do this for you and I divide it by the CPI, and this is why I say technical analysis theory is very incomplete, and some of the numbers that people will throw out are absolutely contrived. That's your
Oh,
gold.
I see. Yeah, yeah.
That's your gold on a their fake number
Yeah,
adjustment.
fake number. Yeah.
So, but it's still an adjustment.
Yeah.
And that is actually an ascending triangle,
Yeah.
which you should expect to break out. So, should you have any concerns about trading long a rising wedge, but it's so high, let me just help you with that. You've just broken, it's barely started. In HVF method, the triggering just in time event only occurred here. And we marked that day and we YouTubed on that day and said you've now, on an inflation-based adjustment base, just triggered a mega move. And we have a target and a stop loss for that as well.
Yeah.
If you're in our community, you'll find all about it. But that's, just make that point as well, Mario. Let me hand back to you.
Yeah, I just wanted to say that one of the viewers said that, and I think I heard that from a friend of mine, this company, EMX, they've merged with another company and it's now called Element. So I'm sorry if I said this is a good, well, it is still a good royalty company, but it's not EMX anymore, it's Element.
You,
They,
you shut the screen share down on your side.
I will, I
This is
will.
a toolbar for drawing. It doesn't have a shutdown.
Stop sharing. Yeah, that's interesting. So it's CPI AUCL.
Yeah, so the CPI is the inflation bit, and
Mm,
the AU means all urban,
yeah, all urban. Yeah.
yeah, and then CSL.
I guess if you used John Williams calculate CPI,
Much better. You
it
and
would
what you
be
all you
much
would
more
get,
falling, wouldn't it?
it would, instead of being an ascending triangle, it'll move down to a
Yeah.
symmetrical one. And in fact, if again, I'll just call it back if I may, because if you look at the silver, your gold would look like how silver is when you do the CPI. It'll just be slightly more squared up and less ascending by
Yeah.
structure. Again, still a symmetrical triangle. So if you do the same with silver, which is, as I say, something I do a lot for the community here, that's silver done on the same basis. And this is why it's such a significant moment. This is the quarter that silver breaks out, guys.
Yeah.
That's super bullish. That on our third takeout. So that's our third impulse. That's our second. And that's
Mm.
the huge macro 1980. And that is your, again, your symmetrical triangle breakout. You have just broken out on a symmetrical triangle on silver, which is incredibly bullish on their numbers, inflation adjusted, which
Yeah.
would be even lower again if Mario, as Mario suggested, if you're using John Williams. But I suggest to you that the gold one I showed you before, which was very ascending, would look more like this if you were using shadow stats.
Yeah.
A little bit more squared up, a little bit
Okay.
lower slung. So hopefully that makes sense.
Yeah. The what was I going to say? I forgot now. Anyway, let's stop.
Take the share back again.
Yeah. Uh, someone's asking. Oh yeah, someone's asking our thoughts on the BlackRock Gold Mining Trust. I have no opinion on it. What I would do, I wouldn't invest in anything related to BlackRock. What I would do though is look at the prospectus and look at what companies they own and maybe buy
Buy
the
the companies
company.
yourself.
Yeah, because I don't want
Contact
to.
them directly and see if they'll issue you certificates if you request, say, listen, I'll only invest in you. And I have a, and blag it a bit. I've got a massive community of friends that all want to buy.
Yeah.
I get to say that for real, but you can blag it. Say Francis said you can. I've got a massive community of friends. Some of them are million stickers, and they all want to come and put money in your property. The only thing they want is they want certificates. Which broker do you use that we could quickly get certificates on purchase? We intend to be long-term holders and advocates for your company. That's how
Mm.
the pitch goes. Okay. There you
Yeah.
go.
Yeah. Mario, love to see you interview Gerald Celente. Have you have your blood pressure monitor handy? He's an interesting guy. I mean, I've never interviewed him.
I
Uh,
have. He's great fun and he's accurate and he's funny. I
yeah,
have to say I had a little bit of a faux pas once, a short, funny story time. The first time I interviewed him, I was trying to be like, lively, friendly, and I just met him and chat him, and I was just trying to break the ice, and it was the first time. And he's an elderly Italian guy, basically.
yeah,
And he was sat there at his desk with a stern face. So I was, just warming up a little bit. And he dressed like a mobster. He had this black jacket and this, the like cravat in the collar and the black hat on it, which he started with, which I think he put aside. And I was like, you're all right. And I was kind of trying to be jovial and friendly, sort of warm it up. And I said, and then I said, you look like you've been to a funeral. I just spat it out to make like a joke. And I just saw his face. He was like, deadpan and squared me. And I was like, whoops, that wasn't one to drop before we were mates.
yeah.
But he warmed up quickly after that. And I was
That's good.
like, he carried on. But just the way he had dressed, he was quite formally dressed, but it was kind of like a mobster's funeral dress,
Yeah,
like black and the cravat and the hat with the band. And he put it one side at one point. But just remember, and his wife had just like put something in front of him to drink. And, he was getting ready. And, you say something and then you go, "Ooh, fuck, I shouldn't have said that." Maybe he has just gone to a funeral. Maybe he thinks I'm a
so
dickhead.
yeah. On BlackRock as well, the way I look at BlackRock is that do I really want to finance what's his name, Larry Fink, who is now the head of the World Economic Forum. So I look at investing a little bit like that as well. I know it's difficult to,
So there's a morality. Can I
yeah,
help you with that
morality
point you're
part.
making?
Yeah, yeah,
When
yeah,
you invest through BlackRock, you are
yeah,
feeding your voting proxy power in the said
yeah.
investment that
That's
you're
right.
doing to a conglomeration that is taking everybody's right and voting power and assuming it for themselves, and
Yeah,
then telling Gillette white men bad, then
yeah,
telling Coca-Cola time you did more trans advertising and waved more flags, corporate Marxism, DEI, diversity for everyone,
yeah.
but us.
And
And
over here
hey, you
saying,
gave them that power. So how bad did you want to do that?
yeah. Oh,
Don't.
someone
Suggestion.
saying, over here is saying, Mario, BlackRock too big to fail, low risk. It's not about the risk. It's about, like Francis said, the morality. It's like why I don't buy government bonds either, and why I try to keep as little cash as possible with the bank. Unfortunately, I have to keep cash in the bank to pay bills and stuff. But
Can I also say on the too big to fail? Yes, too big for them to fail. Definitely not too crooked to cheat their clients and
mm,
not get persecuted for it.
yeah,
Better you have the certificates direct with the company owned in your own name than you have them as your bent friend intermediary
yeah,
because
that's
they
right.
don't give tuppence for their clients. Let me tell you, this is Goldman Sachs times 10 in terms
Yeah.
of stuff their patsies. So I would even think twice about that line of thinking.
Someone said talking about the Royal Mint here in the UK. Yeah, they lost 36 million last year, which is a big loss. And I saw a video about it. I think the reason why they're losing a lot of money is that they used to mint a lot of silver, not silver, sorry, coins just for different countries. And people, countries are going cashless, so they've lost out a lot on that business. I don't think they're going to go bust, but they're still minting gold and silver coins, and I think their coins are really good. One thing I don't like about the Royal Mint is their digi gold and digi silver products, which I wouldn't trust. Like if you're gonna buy something from them, buy the physical gold and silver coins. But actually, when you buy from a dealer, it's cheaper than than buying from the Royal Mint. So
They're
yeah,
not the cheapest. And by the
Yeah.
way, do they have that one rung on the rim that's gone missing? Who was starting that? Was that the US?
Yeah, I
We have
mean,
a ribbed coin. One of them was leaving a space there for some. It
yeah,
was going to
yeah,
be some sort of tracker, some sort of
yeah. I think the
immutable.
UK, the Britannias have those. Yeah, I think it's a way to,
By all the dates before that. Find out what year there was.
yeah.
By all the dates before that. Let all the noobs buy the ones with the digital tracking. I mean,
Oh, you
don't
think
look
that's a
beyond the
digital?
possibility. If
You
I can
think
just
it's a?
finish this point, Mario, don't look beyond the possibility that at some point, if they consider you a stacker and you've said, sorry, boating accident or whatever story you've come up with, I had a few, I sold them, and that they have some law of right of search on the basis that they don't believe you've given full disclosure, that they could have some form of metal detecting and quite advanced technological advice devices for which coins on the certain generation going forward all have some form of high detectability feature. I'm not saying there's a battery and there's a signal in that, but that there's some element that assists with this. These guys have a plan for us, guys. They have a plan for us. They know even the smart are going to try protect their wealth, and they know how they're going to crush us or how they want to crush us. So I would not buy from that vintage on forwards. I would buy the old ones from dealers. You pay less. You get them scanned. You can do a ping test, and you can even get a gun where borrow a
Yeah,
gun. Some of the bullion dealers should have it.
yeah. We're gonna have a final question here, Francis, because it's time. Someone's asking, what's the best country to hide during the collapse? Well, I would say Uruguay. What's your
I
view?
think that's a good suggestion for many people. I think rule of law is pretty stable there. It's never in the news for the wrong reason. Only thing you might, I mean, there's no perfect place, and I think yours is of all the suggestions right up there, like an 8 out of 10. It's reasonable proximity to the US though. But that aside, I would say that's a very good option. I want to say things like, Indonesia and Malaysia and Bali and places like that that are outside of Australia, but in that lower part that are kind of playing between Singapore and China. I would add those into Mario's suggestion. I like familiarity, so no one's going to give me a high score for saying Southern Africa, but actually, in a weird way, it's very good for getting raw food, lots of farmers. That's impossible to get in between on the food chain. I'm not just thinking of gold and silver. I'm thinking of if you're talking a full-blown reset, everything's solar. People are geared up for that. Everyone is power independent, water independent, who has money. There's good areas. It's very secure, despite what you hear. There's parts like favelas in South Africa. I mean, in townships in South Africa, like favelas in Brazil, where the stats get skewed. But there's actually a very good lifestyle, and it's 40% lower than everywhere else in Europe and the first world. But that said, for people who don't buy my story, which I can accept because of the headlines, you've been brainwashed out of it. Uruguay is a great suggestion in Latin America. Panama is also considerable, but even closer to the US. The thing is, it's a very important port and transmission way. So it's not the kind of place that gets bombed in a war because everybody needs it. The infrastructure, it's critical infrastructure. So it's kind of like Suez. It is Suez Mark II or Suez is Panama Mark II, depends which way you want to look at it. So you could consider that. If you're not afraid of the Russian factor, actually some of the Eastern European nations give quite good lifestyle. Croatia, Hungary, and Poland are making the right kind of noises in terms of, indigenous and other things, but they are under the belly of the warring border.
Yeah,
And yeah, I don't know if we've missed anything.
I think
Everybody
even
wants you to go to the Middle East, and I don't fall for the whole Dubai
yeah.
UAE thing. I'm not a buyer. It's a trap. It feels like.
Well, I think a lot of Westerners are actually going to Russia as well. I actually think that would be a good place to be. And Russia's got so much land, it's self-sufficient, but it's a bit
The tax,
controversial.
communist nation. I think the personal tax, I'm going to get this the wrong way around. Someone will correct me, but you double check it. The corporate tax 15%, the personal tax 20%.
No, I think the personal tax is like 13%. There's only
Yeah.
one tax.
It's low teens and the corporate, no, but if you run a business and you will still pay a business tax. There is a
Oh,
business.
okay.
but very low relatively to what you're paying in the United Kingdom
Oh yeah.
and even America,
Yeah,
the land of the free and capitalistic.
I know. Okay, Francis, thank you for coming on, and thank you all the viewers as well. We're gonna end right here. I'm gonna wish you all a very good week.
Can I mention that people, if they want to engage, they can go to the market
Oh
site
yeah,
on YouTube
sorry.
for wealth building, preservation, and freedom, buying and optionality, which gives you choice across, and that's residencies and also having your precious metal spread. It's not just about stacking, it's stacking it in the right places. It's stacking it where you have arbitrage of different legal systems and ensuring that one of your pots, if not all of them, survive. And that gives you optionality and also livability elsewhere without being forced to leave beyond a tourist visa. Look forward to it. Thank you for having me on, Mario.
You're welcome. Ecuador, I don't know much about Ecuador, so I can't.
Well, Chile is popular too as well. That sometimes flares up a little bit on the politics side, but
Yeah,
I think Simon Black's out there, Blackberry Farms.
yeah,
I think Dave Casey or Doug Casey, is it? Sorry, is in Uruguay, as you mentioned.
yeah.
Yeah, so there's a
Okay,
couple of LATAMs. Yeah.
let's end it. All right. I think that went well.